Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, nice to have you back in studio.
Hi, Julieta.
Garth, it's been a cracker day for markets today. I think with that Australian rate cut this morning, especially the resources stocks. You've had a cracker couple of weeks for the portfolio, actually, not a resources share. So let's start with the last trade that you put on for the portfolio, which was a long position on Sanlam. And that looks like it's done very nicely for you.
It has done very nicely, and we've taken profits on this trade as well. This was a trade that we put on about 2 weeks ago, just before I went away. And what I identified, if you have a look at the chart that's up on the screen at the moment, I'd identified that the stock had actually pulled back towards the 200-day moving average, and it had reversed up off that level. Also, there was like a flag-like or channel type of structure evident over there. And at the time where we saw the stock testing that 200-day moving average, and when it reversed up, the stochastic was also very oversold at that point in time. So really all I was doing at that stage was looking for an oversold bounce for a move back up to the top end of the channel to then lock in profits. And it has worked out very nicely for us. We bought 4,150 CFDs for the portfolio at 63 Rand 45. The stop loss was 62.50, target was 68 Rand. Now I did exit at 68 Rand. I had an automatic sell order in there because, as you know, and viewers might know, I was away last week overseas. So ordinarily, I manage these things manually. I normally, will manage my stop losses manually and manage the sell orders manually as well. And the reason I'm saying this is because obviously Sanlam has gone higher. It's trading north of 70 Rand a share today. And one might say, well, it broke out through the top of that channel. Why would you then sell when it's looking so good? Because it is looking good. I mean, that's a very good looking setup still. And it probably can go even higher than where it is currently. But I had a particular strategy in place here. I did put an automatic sell order in, as I mentioned. And we did well. We managed to make 17,762 Rand profit on that trade after all costs are taken into consideration. So it was a very, very good trade, and also nice to have got another one of these nice winners under the belt so early in the season.
Yeah, and this was kind of how the portfolio started last year. We had a couple of really strong trades, and then it does give you the ability to, maybe take a step back and be a little bit more patient when you wait for other trades to emerge. Yep. Guys, just on Sanlam, would you go back in at this point, or do you think it is now maybe overbought? I think
it is overbought. If you look at the stochastic up there, you can see clearly that it is overbought now. So I wouldn't rush into the stock now. I think that your risk to reward ratio was far better to get in lower down where we did. Yeah. At this stage, I wouldn't be chasing it. I'd probably look for the next round of consolidation to potentially get on board again.
Anyway, as it worked out, very good trades. Garth, now, we haven't done one yet for the portfolio, the dreaded put spread option, but before we get to that, I know you want to discuss where we are in the top 40 at the moment.
Yes, that's right. Well, I just want to show you on a chart of the top 40 quickly where we are. I know we've looked at this chart a few times already this year, and what I'd indicated previously on the show was that our market was really trapped between these boundaries with 41,500 at the lower end, and at that stage I said about 44,000 at the upper end was where this downtrend resistance came in. Now we have broken through that downtrend resistance, and the market has been quite strong over the last couple of days. I do still think there's some overhead resistance here at around about 45,500. We are actually trading above that level today, so it'll be interesting to see. But I think by and large, if you look at this, you can see that since October last year, really, we've been in a very choppy sideways type of market. And I'd be cautious to think that we're just going to go screaming ahead here. I still think we're in this choppy type of environment, and I'd be cautious of getting too sucked in on the long side right now. There is a possibility that we still see some sort of a pullback, and what depth that is, or significance of a pullback, I don't know. But we're implementing an option structure today, one of these put spread option structures, which gives us the participation to the downside if the market should go lower. But at the same time, if the market goes stronger, it's not going to cost us much money. So I'll explain the structure as we do it now. The key thing really being that it's like a short position, but we know exactly what our potential loss is on this thing, and for the form of the premium that we pay away.
Yeah, it's not a naked short, as one would call it, and as you say, the premium is paid up front, essentially, so there's no further nasty surprises, potentially. Okay, guys, so maybe talk us through that then.
All right, so if we take a look here now, we've got the, this is a chart that shows along the bottom axis here, you've got the levels on the top 40 index. And then on the left and right here, well, you've got the profit and loss. Above the line, obviously, indicating profit. Below the line, indicating loss. Now, what I've done is I've gone along and I've actually bought 2 put options on the top 40 for March 2015. So the time horizon of the structure is around about 7 weeks from today. The strike on these is 44,000. And I've paid 6,479 Rand for those 2. So if you take the fact that I've done 2 of these contracts, it implies that the pay away on these 2 options, or these put options, is around about 13,000 Rand is what it's cost me to buy those 2 put options. And obviously, the payoff of a put option is that, as you can see there, above 44,000, we lose our premium, the 13,000 Rand that I'm talking about. And then below 44,000, it starts to make money, and that will continue to make money all the way to 0. The reality, however, is that the market's not going to go to 0. It's not, nobody can be as bearish as that. So we need to say to ourselves, well, where realistically could the market go? And let's sell away some of that downside in order to retrieve some premium back. So what I then did against this is I've gone and I've sold short 4 put options with a strike of 42,000. So these are now further out the money put options. And for those, I've received 2,430 Rand for each of those. So it comes to close to 10,000 Rand that I've received for those 4 options. So if you look at the net of those 2, effectively it means I've paid away around about 3,000 Rand odd. And there you can see the short payoff on the short put option. Above 42,000, we receive that premium, and below 42,000, that structure then starts to, or that leg of the option structure then starts to lose money. Now, if I overlay those 2 together against each other, then you get that yellow line over there. And if I just neaten it up a little bit, there you can see it more clearly. So effectively what it means is that above 44,000, I've paid away 3,200 odd Rand. Okay. Below 44,000, this structure starts to make money. It makes its most money at 42,000 on the top 40. It makes me 36,000 Rand at that level. It then starts to give back that profit, and for about 40,100, it starts to then actually lose money. The point being that obviously we're up here somewhere today around about 45,800, so it's quite out the money. But in the event that we do get a pullback back into that range, which we've discussed on the chart of the top 40, I mean, let's have a look at it. If we overlay this structure onto the top 40 again now, there you can see the graph of the top 40 index itself, and now this options structure overlaid onto that graph. So what it says is that below 44,000 here, we make money. We make our maximum profit at 42,000 on the top 40 index, and then it gives back that profit, and only below 40,000 we would potentially start running into trouble. So the implication is that if we do see our market staging a bit of a pullback, let's say a 2,000 or 3,000 point pullback from current levels, we'll be sitting quite pretty in terms of this option structure. And it gives us the ability to participate if the market should pull back. But if it doesn't, if the market remains strong, we know that all we've lost is our premium, which is 3,200 Rand.
Garth, just on, I suppose, the extent to which you would benefit as the market retraces, have you widened that spread for yourself? And I ask because last year, the put spread structure that you put in place for the portfolio, there were some very, very hairy days. You had actually gone long against it and the market turned around. And I just wonder if you've kind of given yourself a bit more fat as far as where you would get a payoff from going short, essentially, than maybe you've done previously. Yeah,
there is more fat in this one. We've got a 4,000 Rand, a 4,000 point profitable area. Also, what I did, and I'll say I did wrong with last year's structure, was that I actually went and I bought against the structure, which meant that when the market fell very aggressively like it did in September last year, we were not only on the wrong end of the option structure, but we also found ourselves on the wrong end of a long position on the top 40 future. So it was like a double whammy. In this instance, I'm not buying against the structure. I'm going to just leave the structure as is, just like you see it there. So it's really protection. It gives us the ability to participate if the market should pull back. If not, well, I know what my loss is. It's 3,200 Rand, and I can live with that. But I'm not going to be aggressive with this one like I was with last year's structure, which certainly, as you said, did cause me a few sleepless nights.
And just another thing, sometimes when you've created these structures, you haven't actually had to pay as high a premium. So this is towards the upper end. Sometimes you've actually been able to net them off against each other. Can you maybe just explain why the premium is around the region of 3,000 Rand?
Yes, that's a good question. So I could have effectively got this structure to have a zero cost if I wanted. In other words, for the puts, the short put and the long put to completely offset each other. But in order to do that, I would have had to narrow the parameters slightly. So that 4,000 point profitable area that we've got is a nice fat, it's a wide area of profitability that we've got. If I wanted to make this structure completely self-funding, I would have had to bring those boundaries in a little bit. And then it obviously increases the risk, the tail risk on the other end if the market falls really hard. So I felt this was a fairly good balance of a relatively small pay away, but still giving us the ability to have a fairly wide, profitable area to participate in.
Okay. All right, so that's the first of the, the dreaded and rather hard to understand put spread options for the year, although, of course, people can go and watch this again on the web if they need to get any further understanding about it.
Sure.
And Garth, when is the expiry date? Is there an expiry date?
Yeah, there is. This is a March 2015 contract, so it'll expire on the futures closeout in March, which is the third Thursday of March, whatever that date is.
Okay. So what does the portfolio look like at the moment?
It's looking good. So these are the trades that we've done this year. We obviously had our Rand-dollar short position on earlier this year, which we took a nice profit there. Then the Sanlam trade, which we discussed in the show earlier, where we bank profit at 68 Rand, and that netted us a profit of 17,000 Rand, so that was a great trade. And then there's this put spread option structure where we've paid the premium of 3,200 Rand, and I've accounted for that premium already in the profit and loss figure, so we've effectively already kissed it goodbye.
Okay, so is that in our portfolio value as it stands?
It is. So 277,634 Rand is what's in our portfolio at the moment. That's up 11% for the year to date. And I mean, it's only 1 month in, so I'm pretty chuffed with that as things stand. And we don't have any other open trades other than this option structure at the moment. But the nice thing about having that options downside protection is that it does afford us the ability then to go and do some other trades if we want to, knowing that we've got the downside covered.
Garth, just got a couple of minutes to go before we talk about the next courses that you have. Having seen what the resources stocks in particular and shares like Sasol have done in the last couple of trading sessions, would you still be going long of resources? Do you think maybe that's going to be an area of fun for traders in the next couple of months? Or do you think maybe it's a little bit overdone for now?
Yeah, my suspicion with the resources is that they're going to remain volatile, but they're probably going to chop around at what I term the lower levels. I mean, obviously the lower levels being quite a broad band. But if you look at stocks, you got to look at any stock or index or anything that's crashed in the past. And I mean, let's be honest, the resources index crashed last year. It fell 40% in about 4 months. That's a crash in my books. You never see a V-shaped recovery after a thing like that. You'll always find that there's a period of basing where, yes, you see some very big bounces, but then you can also see some fairly aggressive moves to the downside as well. So my feeling is that on stocks like Sasol and Billiton and the like, is that they're now into that basing phase, where we might well have seen the worst, but I don't necessarily see them screaming higher either from these levels. I think the likelihood is that we're going to find the choppy action while they form a base now.
Yeah. Oh, it'll be interesting to watch. Garth, and so next course dates that you want to tell us about.
Yes, all right. So I'm starting this week, Thursday. I've got an Understanding CFDs course in Johannesburg on the 5th of February, and there are still seats available on that if you'd like to attend. And then Cape Town, Durban, we've got CFDs courses and high probability trading courses in all of the major centres. If you'd like to attend any of these, please email me, garth@traderscorner.co.za, and I'll send you all the details.
Great. Garth, we'll leave it there. Thanks as always for joining us. Welcome back. Nice to have you on the program. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.